Those are all the top headlines that we are tracking from the world of commodities. But first up, let's put the spotlight on the oil market then. And today it is currently trading absolutely flat, and it has recovered from the lowest point of the day to trade near that $65.9 per barrel mark. Remember, last week Brent crude prices rose over 1%, but today, of course, it is trading absolutely flat near that $65.9 per barrel mark. But remember, all eyes are on that meeting between Trump and Volodymyr Zelensky later today, and any kind of peace deal that could be signed between Russia and Ukraine could add to supplies of oil in the global market, which could put downward pressure on oil prices globally. Now remember, India imports nearly 85% of its crude oil requirements, so any kind of downward pressure on oil could actually be a positive for a country like India. But remember, that meeting is scheduled to happen today, so all eyes will be on that. And a whole host of leaders from Europe are also expected to attend the meeting. Meanwhile, let's also put the spotlight on the yellow metal then. It is now trading with gains of nearly 0.4% to trade near that $3,350 per ounce mark after it ended 1.5% lower last week. So those are the kind of moves that we are seeing as far as the yellow metal market is concerned. Now remember, Trump's tariff agenda is aiding inflationary pressures in the United States. In fact, US wholesale inflation accelerated in the month of July, and that is leading to hopes of no rate cut in the month of September, and higher rate cuts is always continues to weigh heavy on the yellow metal market. So those are some of the factors which continue to impact the oil market as well as the yellow metal market. But to discuss this in greater detail, we are now joined by Mr. Prathamesh Mallya, Deputy Vice President, Research, Commodities and Currencies at Angel One. Mr. Mallya, thank you so much for taking your time out and joining us here on ET Now. And first up, let's put the spotlight on the oil market and the kind of expectations the world is building in ahead of that all-important meeting. If you can tell us, if at all a peace deal were to be signed, or if we progress in that direction, what impact will we see on the oil market in the near term, say in the next 2 to 3 odd days?
Good afternoon, Aisha. I think the peace deal that we are discussing here.
I've already joined in.
Hello, can you hear me?
Mr. Mallya, we can hear you. Go ahead.
Yes. The peace deal that we're talking about between the discussion between Russia and Ukraine to settle down on the war front is happening for a very long time. So I would place the possibility of any positive outcome from this particular discussion at 50-50. In that sense, even if it comes out, the discussion comes out positive, it would possibly add more supplies on in the oil market, and it would further pressurize oil prices. Although at present crude prices in the international markets has stabilized around $60 to $65 mark, I think if the meetings comes out positive, $60 is something we would see a base forming for oil prices. And as far as current situation is concerned, I think there is more correction on the cards in this counter.
Okay, so more correction on the cards, and perhaps oil prices could fall to $60 per barrel. That's the word coming in. But Mr. Mallya, let's also talk about the other side. What if we don't get any kind of positive announcement on the war front? How much could oil prices rise then in that case?
If we do not get any any positive outcome from this particular discussion, oil markets are well balanced on the supply side. The demand side also looks fairly balanced. So no premium or no volatility expected if there is no show in this particular event that is happening. So I would still place that the risk premium, if anything happens, and if does not happen, would be around $2 on the downside and $2 on the upside. Nothing much expected from this event.
Okay, so nothing much is expected from the event, and $2, that's the deviation that you're working with basis the outcome later tonight. But Mr. Mallya, if you can also share your thoughts on the kind of moves that we are seeing in the precious metal market, especially gold. Now, inflation data for the United States for the month of July was weaker than expected, and that is now threatening prospects of rate cut in the month of September. How do you read this, and where do you see gold prices headed in the short term?
I think I'll put things in Indian perspective. Gold prices at 1 lakh, it's really at the high price point. So irrespective of the outcome, whether interest rates declines or not, I think the demand side has definitely taken a hit on the Indian side. As far as international side is concerned, $3,350, it's where the prices are trading at. So any significant change from current levels would definitely require a change of stance on the US central bank to have a rate cut, but that possibility seems to have been delayed. So yes, positive momentum seems to be stuck for the time being for both the precious metals, but I would define a range of just $50 as far as gold in the international market is concerned. It's 3350. I think the downside would be 3300, upside would be 3400. In the Indian markets, nothing much expected. It would be a consolidation mode, 99,000 on the lower side and 1,01,000 on the higher side.
Okay, and since you're also talking about demand, Mr. Mallya, given the kind of announcements that we saw over the last 3 days with respect to boosting consumption, how do you expect demand trends to shape up for the yellow metal market?
I think if you're specifically asking about Indian markets per se, 1 lakh seems to be a high price point. So definitely demand season on in India, irrespective of the price point, there would be some purchases and demand side seems to be, although in a rising mode, but it would be less of say a consolidation kind of thing that would be happening, but nothing much as far as booster on the macro front to drive gold demand higher.
Understood. And what about the upcoming festive season then? I understand 1 lakh is a higher price point for consumers to actually buy gold. But do you expect any kind of uptick in prices led by festive and wedding season demand buying?
I think if a risk premium comes in and the demand boost comes in, I think 3,000, 4,000 upside looks possible. But then again, resistance zones comes into picture and the news flow from the international markets would definitely define where is the momentum happening from current levels.
Oh, understood. So that's as far as demand and precious metals is concerned. But Mr. Mallya, since you're with us, if you can tell us what's going on when it comes to industrial metals globally then, both ferrous and non-ferrous, any particular metal, industrial metal that you're bullish on over the next 1 or 2 odd months?
I think copper is something which I am very positive on, taking into consideration the macros that is happening globally. But there is no impact on the supply as well as demand. So I would put any action coming from China would definitely be a big booster for the entire metals pack. But then the macro situation with respect to Russia, Ukraine, and US, I would put this on the sidelines for the time being and wait for real fundamentals of base metals to kick in, and copper would be an ideal pick in the entire base metal pack, followed by aluminum. I think as far as MCX prices goes, 920, that is almost a gain of 4 to 5% from current levels, looks very much possible in the Indian markets.
Okay, so that's the view as far as copper is concerned. Mr. Mallya, thank you so much for taking your time out and joining us here on ET Now and helping us understand what the expectation is from the meeting between Trump and Zelensky later tonight. Thanks.